Good morning and welcome to Morning Markets on Friday, the 27th of March. A couple of things from our morning meeting that I'd like to share with you that we discussed today. The first of which has been the performance of global equity markets over the past couple of days, where we have seen quite material moves higher from global indices. For example, the S&P in the US is up 17% from its low, and here in the UK, the FTSE 100 is up about 16% from the low point earlier in the week. So quite significant moves in equity markets. That's not unusual in the type of environment we're in, and I think particularly in context of the significant falls that we've seen in equity markets over the past number of weeks. Turning then to one of the things we touched on yesterday was the US jobless claimant count that would be coming out in the US in the afternoon session. The number came out above expectations, 3.3 million people in the US claiming unemployment benefit last week. To give you some context around this, the number was 265,000 the previous week, so a near 12-fold increase in that claimant count. It's also the highest number that's on record going back to the 60s. To give additional context around that, looking back to the financial crisis, the highest weekly claimant count was around 660,000. So that gives you some indication of the magnitude of the economic stop that we've seen in the US and the implication that that's had for unemployment. However, within that, really interesting to note that the market, i.e. the equity market, has looked through that yesterday and moved higher back to those levels that we previously discussed. The other two things to mention this morning, Andrew Bailey chaired his first MPC meeting as Governor of the Bank of England. Expectations wasn't high that anything significant would come from that. I think the key thing that we can take away from there is just the movement in sterling over the past number of days, where sterling got down to a 30-year low last week at 114 relative to the dollar, and just as I looked this morning, it's trading at 122 to the dollar. So that's a move of 7%. Maybe that doesn't sound like a lot, but in currency market terms, that's quite a significant move and just shows the volatility and some of the dislocation in asset markets that we've seen over the past couple of weeks. And we touched yesterday on Europe and the Eurozone potentially starting to be able to work together slightly better. Needless to say, the old problems in Europe continue to raise their head, with Germany in particular not wanting to move forward with this support program that's being discussed at the moment. So the leaders of the various governments have sent their finance ministers off to do some more work to try and come up with a different arrangement. So we'll continue to monitor that. But again, it speaks to the political challenges of Europe and the political divisions that at this point in time are hampering economic solutions. I think the other final thing just to mention today is the move that we saw from the UK Chancellor yesterday to extend the support package that is in place for employed workers to the self-employed. And that is a very significant move and also a very supportive move for the self-employed. So as you can see, and you'll appreciate from the commentary this week, that there's many moving parts in markets at this point in time. I think the key thing that we take away from this is the need to focus on diversification and also the role that multi-asset portfolios play in navigating our way through this challenging market environment. Thanks for watching, and I look forward to speaking to you again next week. Thank you. Bye.